What is up, Bitcoiners? It's your boy CK, and I sat down with the CEO of Argo Blockchain. Argo is one of the biggest players in the Bitcoin hash rate game. They are a huge miner. They are public in the UK, and they are bringing on hash rate in North America like no other. They're huge partners with Bitmain as well as other manufacturers, and they are keen on bringing energy or green energy to the Bitcoin mining space and to make Bitcoin synonymous with green energy. I personally find myself aligning with, wanting to make Bitcoin a name in green energy, but I kind of have mixed feelings about kind of some of the ways that Peter framed that. In general, I'm curious to listeners what you think of some of the moves that DMG and Argo, two large players in the North American game, are doing in terms of like creating a green mining pool and stuff like that. But outside of kind of a disagreement on that kind of marketing, I really found this interview to be extremely, extremely insightful. Peter has kind of gone from just a crypto enthusiast to the CEO of this huge company that is building such amazing infrastructure in the Bitcoin space. They are really making moves in bringing hash rate to North America. And he has a lot of insights around what manufacturers are, key here to be paying attention to, how to deal with a Bitcoin treasury, why mining Bitcoin as a public company to begin with, and much, much more. You guys are going to really like this podcast. And if you haven't heard of it yet, you're going to really like Bitcoin 2021 because this is the biggest, the baddest, the most epic Bitcoin conference in history. Nothing like this has ever happened. This is the biggest event in Florida since the freaking Super Bowl in January. Y'all aren't going to want to miss Bitcoin 2021. Go to b.tc, check out that website. Our speaker lineup is absolutely legit. It is absolutely stacked. Michael Saylor, Jack Dorsey, Nick Szabo, absolute legends. And that's just the tip of the iceberg. There is so many more incredible movers and shakers in the space that are going to be at the conference. Everyone's going to be there in person. We are about to completely sell out. I would be remiss not to tell you that. 10,000 spots, almost all completely gone. Our ticket prices have increased because of that scarcity. If you want to be at the biggest, baddest, most historic Bitcoin event in history, you need to go to b.tc/conference. Go check out the Bitcoin 2021 conference. It's happening June 3rd, 4th, and 5th in Miami, Florida. It's not one to be missed. Y'all, use promo code Satoshi to save yourself 10% off. I'll see you in Miami. Enjoy this fantastic episode with Peter Wall, the CEO of Argo. Bitcoiners, I am sitting across from the CEO of Argo Blockchain, Peter Wall. Welcome to the Bitcoin Magazine podcast.
Thank you, Christian. It's great to be here.
So, Peter, for the people who don't know who you are and don't know what Argo Blockchain is, why don't you give the listeners a quick introduction into why they need to get up to speed and all the amazing stuff that you're building?
Sure. Thank you. Argo Blockchain is a publicly listed cryptocurrency miner. We're listed in London. We were the first cryptocurrency company to list on the London Stock Exchange, and still really the main kind of crypto stock, or crypto company that's in the UK. We are also available we also trade in the US on the OTC market. And we have mining facilities in Canada and the US. And we've been mining for a while now. We love crypto.
I guess, can you tell me a little bit about mining, right? And I guess before we get into that, actually, a little bit about yourself and your background. How did you get into Bitcoin and crypto, and how did you kind of get involved with mining?
Sure. So I first heard about crypto back in 2013, 2014. I was living in Indonesia, of all places, in Bali, and running a co-working space. And a guy walked in and started talking about Bitcoin. And I was like, what? And he, said, look, this is the future of money. It's this digital currency. It's amazing. You guys should take it here. You should accept payments. I've left my job in the United States and I'm now a Bitcoin evangelist. which we were all like, wow, that's bizarre. And he kind of quickly launched this community of crypto enthusiasts in Bali and gathered people and started kind of talking about Bali as a Bitcoin island. Similar, we've seen it kind of in other places pop up around the world. And we were kind of at the heart of that. So we accepted Bitcoin as payments from our members. We had weekly meetups. We had a Bitcoin ATM, which was awesome. And so I became, somewhat fluent in the language of cryptocurrency through kind of that, proximity to all of that. I was still running the business and had obviously lots of other things, but I got my first wallet and kind of learned about the whole ecosystem.
I was not expecting that.
Yeah, that's the thing about crypto. Like people, it's a very it started as a niche world, and it's now become a thing. And it's funny how now you run into people and they're like, oh yeah, I was in crypto back in 2016. Everyone I meet, I just notarized something on the over the internet, and the notary guy's like, so you run a crypto company, because he saw like in my job description, Argo Blockchain. I'm like, yeah. So it's cool. And then fast forward a few years, I had someone I knew in my world who was launching at Argo, one of the original co-founders, and he called me up really like the first month of the business and said, do you want to help get this thing off the ground? I need some help with operations in Canada. And I had just finished another project, and I was like, sure, I'll join the team for 3 months or 6 months. I didn't know how I was going to go. And now and then, a few years later, I took over as CEO, and now we're one of the biggest, publicly traded mining companies in the world.
Really, I feel like Argo's story and your story is it's almost like Bitcoin's story. It started in, the wilderness of the internet in like really kind of obscure corners, and all of a sudden just balloons into this huge establishment. So that's really exciting. And I guess I want to why mining?
Let me just add one thing on that, Christian, because I think you're onto something there. And I think the cool thing about Bitcoin is that it's been like pronounced dead so many times. And like, I feel, like our company has kind of we've been through enough cycles that now when we're in a cycle, whether it's up or down, you just kind of have to like go with the flow. And that's one of the things. This is the new, it's like, I was listening to a podcast the other day where they're like, is it Bitcoin acting like stocks, or are stocks now acting like Bitcoin with the kind of volatility that we're seeing out there, in the world? And so I appreciate that about crypto, is that it kind of teaches you that, one day you can feel like you're on top of the world, and the next day you're in the gutter, and you have to be okay with both. You have to kind of be able to ride the roller coaster, as it were.
Yeah, well, Bitcoiners have diamond hands, and Bitcoin businesses definitely have a lot of experiences enduring volatility. Later on, I would definitely like to pick your brain on, how you think about just operations and business planning for, bull run Bitcoin mining, bear market Bitcoin mining, and how you think about that. But I kind of want to stick to more of an introduction to Argo first. I want to talk about why proof of work mining, right? Like why there's so many things happening in crypto generally, right? And sometimes it seems like proof of work and mining is like this like dirty stepchild, but when it's really at the heart of all of it, in my opinion. But it's not the sexiest part of crypto generally, right? Like why is Argo blockchain in the proof of work game?
Yeah, it's a really good question. And yes, you're right. Like you go to conferences and everyone's talking about like DeFi and talking about NFTs or what, like the latest thing, tokenization of the world. And then you're like, yeah, we're miners, we're like the backbone of the whole thing, but no one really, pays us any attention. And I'm good with that. And that being said, we do think of Argo as more than just a mining company. We do think of ourselves as a blockchain technology company. So we are engaging in things outside of mining. We've made some DeFi investments. We're experimenting with proof of stake. We think of ourselves as technologists and as blockchain, enthusiasts. So above and beyond just the mining, we do engage in the ecosystem. But the company originally became a miner, or started as a miner, because it was conceived as a mining as a service company, which if you'll go back, fast forward back to, or rewind back to 2017, 2018, there was lots of companies in the space that were setting up, the likes of Genesis, that were setting up these mining as a service companies. And so the founders of the company thought that that was a viable way to get listed, because there was other companies that were already doing that. And so, they put together the business plan along those lines. Now, it didn't last that long, because pretty quickly after we did all of the work of setting up machines and setting up mining infrastructure, we realized it's actually more profitable as a company to mine directly, to your own account, to be, a so-called prop miner. So we pivoted in early 2019 from mining as a service. Really within the first year of operations, we pivoted away from mining as a service to mine for our own account, and have just been building our infrastructure ever since then, with a focus on, efficiency, and a focus on clean power whenever possible.
That's awesome. And I definitely want to talk about efficiency and clean power later on too. But I do kind of want to talk about like the breakup of your business, right? So obviously mining is a big portion, right? And that's like the cash cow of the business, but you're doing other things. I kind of want to understand like what percentage of Argo's business is like Bitcoin mining versus altcoin mining versus staking versus like R&D and venture, kind of venture investing. Like how do you kind of like break down the business as a whole?
Yeah, it's a good question. So, the heart of the business in the short term and the medium term is Bitcoin mining. That's where the bulk of our infrastructure is. That's where, 95% of our revenue is. And that's, that we have to keep our eyes on the prize and make sure that we're protecting and thinking about that. So that's kind of, the core to everything we do currently. 10 years from now, 20 years from now, maybe even 5 years from now, we pivot away from that as we go through cycles, and as both Bitcoin cycles and technology cycles, likely there will be some innovation that happens, and that's why we're kind of trying to build those stepping stones to get into the other parts of the ecosystem. So, what other parts of the ecosystem are we playing in? You mentioned altcoin mining. We mine Zcash currently. We've mined, over the last, since 2018, over the 3 years of the company's existence, we've mined lots of different altcoins, everything from Ethereum to Ethereum Classic to Zen to ZEC. So we've had a mix of altcoins that we've mined over the years. We've also, we're also looking at doing some innovation around proof of stake. We haven't announced anything yet, but that's obviously an area that's super interesting, and we feel like there's an opportunity to generate yield from. DeFi, we have made an investment into Pluto Digital Assets, which is a UK company that's essentially a DeFi incubator and investor. And they've been doing incredibly well, kind of making micro investments in small, DeFi projects that are early stage and really hard to get into, really kind of inaccessible for the average person and the average investor. And even for us, given all of our focus on everything else, it's hard for us to get into that, into those deals. So that's been really exciting, and they're planning to list in the future in the UK. And then in terms of the R&D and the infrastructure side, we've just signed a deal with Navier, which is a cryptocurrency design and construction company in the US. They've been around for a while. They've got an incredible team, similar to us, like a small, agile, kind of crypto-centric team. And they're going to help us build out West Texas and work on our immersion mining, kind of co-design our immersion mining that we're going to be doing now down there. So that's another big part of what we're focused on right now is infrastructure in Texas, and then the R&D that's going to go into that, because we strongly think that immersion mining is the future, given the kind of efficiencies you can get out of it and the way you can push the machines when you put them in a bath. In liquid and it's just a great way to control heat. It's a good way to make the machines last longer, and it's a good way to be able to push them. So those are kind of all of the various pieces that we're working on currently.
All right, awesome. Well, that is it feels like it's a very wide range of things, but at the same time, it does also feel like there's a constant theme there. I guess
Yeah, I think
if
it
you
fits.
could,
I think it fits together, Christian. Like, that's the thing is like we do try to be consistent. Like we do get offers all the time from people like, are you interested in this or interested in that? Like things that are a little bit outside of our area. And we're having to be disciplined about saying no, because when you get to have the kind of brand that we have right now and the kind of recognition that we've had, especially over the last 6 months, there's lots of inflow of ideas and pitches and projects. So we're trying to kind of make sure that we execute on the areas that we're good at, but we also stay open to new ideas.
yeah, it's like there's a DDoS of inbound, right? And you kind of have to like have a good way of signaling or finding the signal there without just cutting off the flow completely. It's definitely something difficult to have to deal with, but also a good problem to have, right? I want to transition the conversation and kind of talk about, like you said, 90+% of the business short to medium term is Bitcoin mining. Obviously Bitcoin pays you in Bitcoin. You have to manage a treasury in Bitcoin. As as an operator like yourself, a publicly listed company, you're managing shares, you're dealing with that, you're managing a Bitcoin cash flow. Like how do you deal with like treasury management and dealing in Bitcoin and fiat at the same time?
Well, 2020, we had a system in place, but then 2021 started and everything kind of changed, because obviously we started this great bull run. So 2020, we were acting like many other cryptocurrency miners. We were mining Bitcoin, selling a portion of that Bitcoin on a regular basis, and converting that Bitcoin into fiat to pay our operating costs. And that worked well. That's a model I don't want to say that's a bear market model, but that's in a model where things are not, supercharged the way they are right now in the kind of cycle that we're in right now. So we get into 2021, and what does the new model look like? The new model looks like we have more cash. We have, our share price has increased. We've been able to do some equity raise. We have more cash on hand. Our operating costs, our margins are so good that our operating costs seem small and significant in comparison with the cash on hand and with the type of revenue we're bringing in from mining Bitcoin. So we haven't sold any Bitcoin so far in 2021. We've just been holding. We currently have it's been great. It's a good model for us. So we have over 750 Bitcoin in Treasury right now. We mined 165 Bitcoin last month, and then moving forward, it's a month to month, quarter to quarter decision. We look at Treasury. We look at kind of how much cash do we need on hand to be able to cover off our operating costs, cover off things that we're doing, like building out Texas. So it's a balancing act, but it hasn't been that difficult in 2021 because we've been in this really privileged position in this supercharged run.
Yeah, and I'm sure that the constraints around like ASIC production, delivery, all that kind of stuff have really, lent to Argo's advantage, because Argo's been, ordering and building up your mining stash and equipment stash far before kind of 2020 started like throwing some major curveballs into the supply chain.
Yeah, we had a big install in early 2020 of like a really significant install, or seemed significant at the time. Now, things are moving so quickly that the numbers from 2019 and 2020 are small compared to what's coming now. And then we made another order in November at the end of 2020, and then we made another order in January. So all of that infrastructure, the November order has already been installed. The January one is being installed in the second quarter, this quarter. So we're happy with where our infrastructure is. We've also signed a deal with ARBKF Blockchain. I don't know if you've heard of those guys. They're miners or ASIC mining developers out of Toronto. Really smart guys, great track record in technology, above and beyond crypto. They've been working kind of in the world of semiconductors for years and years. And have great connections in Asia and a great track record of producing technology. So we're getting some machines from them in the second half of this year and into 2022, which we're really excited about. But it's an interesting time right now, Christian, for gear for adding rigs, because prices have, as you know, like demand is high, supply is low, return is good, but so prices have really gone up, and so it's an interesting time. It reminds me of kind of 2017, when you had a lot of publicly mining companies and just people in general, like overpaying for machines. There was lots of people just throwing money at machines. And then, there was a downturn, and a lot of people went out of business because they had overcommitted to certain technologies. So we're mindful of that. I'm not saying it's exactly the same. Obviously, this cycle feels different. It feels way more institutional. It feels kind of, we think it feels more stable, even though there's obviously, the kind of volatility some volatility that we've seen. But, volatility over 50K feels a lot different than volatility under 10K. That's for sure.
Oh yeah, absolutely. Like I've had people coming out of the woodworks just saying, well, now that Bitcoin's here to stay, I guess I can. And like, okay, well, I'm glad that we're on the same page that Bitcoin is not going away. So I want to dive deeper into the ASIC markets, but I do want to close out the Treasury talk really quick. Like you as a CEO of a public company, you see a guy like Michael Saylor go out with a really aggressive Bitcoin accumulation strategy and start leveraging even bond offerings and issuing shares at some point to potentially do it. Like, how do you kind of look at that? Like, let's call it financing strategy, and like how do you see your Argo's place right now and its potential to kind of like leverage that kind of stuff to outcompete, to build out facilities, acquire Bitcoin, acquire ASICs, that kind of stuff?
Look, I think Michael Saylor has done a lot for the space, and obviously, it was just remarkable because a year ago, no one has heard, and no one in the space had heard of his name, and all of a sudden, in the fall of this year, he makes those announcements and makes those purchases, and then above and beyond that, goes out and becomes an evangelist, and tells a really great story about Bitcoin as a reserve asset, as gold 2.0, as something that's worthwhile having on Treasury. And he's been proven right. I mean, look at their, average Bitcoin cost that they've, purchased at. It's remarkable, and they keep adding. So I think on the one hand, he's done this thing where he's added Bitcoin to their balance sheet, and that's been significant. But you're right that the one thing that he's done that a lot of people have overlooked is he's also, through Wall Street and through investment banks, come up with some really creative financing instruments to allow people to get access to Bitcoin and to
just pent up demand, really, and he's just solving that for them.
He's solving it. So I think it's interesting. It's something that we're following. We're listed in the UK right now, so the ability to be creative, the way he's been creative, is not quite there for us, but it's obviously something we're following, and I think that those are the kind of innovations that we're going to see moving forward, from public companies that are in crypto and from public companies that are not in crypto. I mean, MicroStrategy, ironically, they're one of the biggest companies listed in the Block ETF, where we're also a holding. And yet they never mined Bitcoin. They have nothing to do with crypto other than they have a ton on their balance sheet. So it's fascinating.
They're a user.
Yeah, exactly. They're a power user.
Okay, that's interesting. So I want to dive back into like the ASIC market. Like, as you kind of said, it's volatile, like it's very hot. Mining once again is like something that is sexy and people want to do it. It's, that is only really during the bull market. But can you talk to us about like the actual market for ASICs? Like, who are the top players? I know that, Argo has a relationship with Bitmain, and you guys go there frequently. You mentioned Epic. That was the first time I've heard of that ASIC producer. I guess, can you tell me about like the market as a whole, and even how Argo kind of, goes about sourcing equipment?
Sure. The last thing I just want to say on the last point, about, what we were just talking about in terms of like creativeness. We were fortunate, Christian, that we were essentially, because we came to the market a little bit later. We listed in August of 2018. We were kind of born into a bear market. So the way in which we approach gear purchases is really from an ROI, kind of what we call smart growth mentality, where we try to make sure that any machines that we buy are going to ROI within a certain time frame, within a 12 to 18 month time frame. Often they perform better than that, but we look at the market and look at projections and try to do it within that time frame. So in terms of where the ASIC market is right now, obviously Bitmain is the biggest name, and they've been pumping out the S19 series of machines are really good quality. They're super solid. They're a hot commodity and they're very efficient. And so far they've all been delivered on time, which has been good for the kind of reliability metric of the manufacturers in general.
Yep.
But there's Bitmain is not the only player out there. There's Canaan, there's MicroBT, there's Silicon. There's a series of Chinese manufacturers that are producing machines, and they're all of decent quality. There's also now a second tier. I mean, Bitmain's kind of in a tier of its own, and then there's kind of the 1B. If Bitmain's 1A, then there's 1B, where those other companies I mentioned are located. And now there's a second tier of manufacturers that are coming out that are challenging Bitmain, that are getting access to foundries, that are building their own relationships with clients, buyers, and also with foundries, which is really the key relationship. Because if you can't get chips, then you're not going to be able to build machines. And so I think we'll see. I mean the industry in general, the mining manufacturer, it's been so hard. There's been such competition to buy the machines that things like super duper fantastic customer service has not been part of the culture of machine manufacturers. Warranties are 6 to 12 months in general, and they generally sell and then move on to the next, and their prices fluctuate depending on the price of Bitcoin. So it's an industry that for us, a company like us, we want to be as vertically integrated as possible. We want to have great relationships with our power suppliers. We want to own our own facilities moving forward so that we can keep our costs down as low as possible. Cut out any middlemen. And then on the manufacturing side, we want to have great relationships with manufacturers so that we can get machines when we need to at a reasonable price.
Makes a lot of sense. And yeah, I mean, again, I'm just kind of an outsider looking in, but it seems like an anxiety inducing industry to kind of deal with. Just, again, having to, I don't think people understand, okay, ASIC producers, yes, there's the tiers of those ASIC producers, but in the grand scheme of foundries, those ASIC producers are all in the bottom tier of foundries. But yet Bitcoin just has such this insane opportunity on the other end that these kind of under prioritized companies have to figure out a way to produce. And it's been pretty amazing to kind of see it just kind of unfold.
It's really true. I mean, you're totally right, Christian. The global chip production, less than 1%, the estimated number is less than 1% goes to cryptocurrency mining machines, and the likes of, the companies we were just talking about. And yet, especially right now, Bitcoin's captured the imagination of so many people, and people are trading. So that's just another reason why supply is in such short, why crypto is in such short supply right now, especially proof of work crypto like Bitcoin. It's just hard to get your hands on gear, and the gear is really expensive. And then once you get the gear, it's hard to get your hands on low cost power to run that gear. So there are lots of barriers to entry into the space, into the mining space. It takes a while to know what you're doing, to build the relationships with the manufacturers, and it takes a long time for the manufacturers to build relationships with the foundries. So that's why we haven't seen just a flood of gear coming out. And the metric that shows that this year so far is mining difficulty. which hasn't gone up significantly, is nowhere near caught up to the rise in the price of Bitcoin in terms of percentage. And that's really where you, as a miner, where you get your margin calculations from. You look at what's difficulty doing in relationship to Bitcoin, and then you figure out, okay, what's your margin like. I mean, our margin, Christian, for the first quarter of this year was well over 80%. And that's, so you think about the way we calculate our margin, that's our power costs and our hosting costs taken away from whatever revenue we're bringing in for Bitcoin. And the Bitcoin is calculated on a daily basis at the price of that it's minted. So our last month we mined 9.1 million worth of Bitcoin in March of this year. An enormous amount of that, and our G&A costs are very low. So an enormous amount of that is profit right now, which is amazing. And the reason why that margin is so high is because difficulty has not increased as quickly as many people thought it would.
Yeah. I mean, again, there's so many like curveballs there, but the reality is that it's just not easy to make this equipment. It's not easy to compete in a global market to put this equipment and deploy it. And yeah, I mean, you pretty much nailed it all there. I guess just kind of going along the flow of the conversation, kind of half of the equation is acquiring the equipment. The other half is actually deploying that equipment, having it receiving, deploying, getting the energy contracts. In Argo's case, prioritizing green energy. In some cases, I know for the most part, most miners just their main proxy is energy, is the cheapness of the energy, which usually equals green energy anyways. But I guess, can you just talk a little bit about the second half of the equation, which is like, once you actually have the equipment, like how do you deploy it? What are the challenges that are involved, and how does Argo find success?
Yeah, so I mean, the main challenge is on a kind of a big picture level, is getting huge amounts of power, megawatts of power to machines, and that's you've got to go from your high voltage to your medium voltage to your low voltage through various transformers and in an efficient manner to get it to your machine, so you're not losing a lot of power. And then once it's at your machines, then you've got to put them in a facility that is right now the majority of Bitcoin, right, and crypto mining facilities are air cooled. So, there's tons of fans, there's tons of noise. People are, they think about Bitcoin mining, they think about the noise of the fans, and those fans are just sucking huge amounts of air through the machines to cool things as much as they can, because the machines are working so hard, they're generating a lot of heat. And, a traditional data center, you've got, backup, you got redundancies, you've got, all kinds of systems. It's super clean in a lot of them. Not that crypto facilities are dirty, but they're the standards of a traditional like tier 1, tier 2, tier 3 data center versus a crypto data center are different. There's no air conditioning involved in a crypto mining facility. Like I said, they're air cooled, and then they're often in kind of rural areas where they have access to good power. And that's really the name of the game, is just, making sure your machines are running as much as they can, as long as they can. And then when they fail, having a system to fix them and get them back up as soon as you can. And that's what, we've worked with various partners in Canada and the US. Over the years, we've run our own facility. We've partnered with other people at their facilities. And now we're building this flagship facility in Texas, which we're really excited about, which is going to be 200 megawatts. And at least in the first iteration of it, there's access to up to 800 megawatts. And like you said, we really try to focus, Christian, on green power and using renewable power whenever possible.
So I would be remiss if I didn't pick your brain about the most recent kind of dramatic hash rate drop over the weekend, or I guess starting kind of Friday. A lot of it was pointed to the Mongolia region in China, and we saw at some points a negative difficulty adjustment of over 30%, which is historic for Bitcoin. What are your observations of kind of like that event, and what kind of, I guess, learnings can you point to?
Yeah, it's really interesting. I mean, I'm just looking at the difficulty graph right now, and like the how much hash rate there is on the network. And, it's remarkable how much hash power came off. The challenge with China, Christian, is that it's just hard to get data that, is reliable coming out of it. But I mean, I'm looking here now. It's remarkable how much like you said, like 30% of hash power has come off. Now it looks like some of it's coming back. It dropped as low as, looked like it dropped almost to like 100, below 110. And now it's back up around 150, and it was up around 170. Like this is the network hash rate. What does that mean? So it means that we don't know what happened in China. There's different reports. There was some kind of leak at a coal mining facility. The coal mining monitors or the inspectors shut that facility down, and then shut all facilities down like that, which is a good thing for the planet, because I personally don't think we should be mining crypto with coal powered energy sources. And then that took a huge part of the hash power offline, because I think it was above and beyond just coal. They kind of shut down the whole grid and all Bitcoin miners in that particular part of China. So I think we're learning kind of more and more, getting more and more data as we go out of China and seeing. But again, it's hard to get a real clear sense of what happened. But in terms of difficulty, it's kind of too bad that it happened on the 16th or whatever, because there had just been a mining difficulty adjustment. So, and that was up, roughly 2%. And now the next one is roughly again 2 weeks after that, because mining difficulty adjusts every 2 weeks. So I'm looking now, and the next projected adjustment in 12 days is down 6%. So it will definitely come down. It won't be a 30% drop. Because some of that hash power will come back online as the power comes back online. But mining difficulty is just fascinating to watch. Its correlation to Bitcoin, its correlation to like economic forces in the world. I'm sure every fall, when they move machines in China from the rainy, at the end of the rainy season to kind of different parts where there's other power during the dry season.
To this region, to the Mongolia region.
Yeah, exactly.
I guess apparantly up to 30%.
I guess up to 30%. I mean, yeah, it's like, I think it's the Xinjiang region. Last year at the end of the rainy season, there was a difficulty adjustment down 16%. And then it came back on over the next 2 weeks as the machines were reset up in a different part of the world, or a different part of the country in China's case. But look, it's really hard. I mean, it's really hard to know exactly what's going on in China, but for sure, this was a significant event.
Yeah, I mean, and I think the point that you made about this was the express worst time possible for something like this to happen in terms of like Bitcoin cycles. Bitcoin just adjusted up, and then all of a sudden the hash rate drops down. So it actually takes longer than the approximate 14 days to readjust, because now blocks are coming in slower. With that being said, fees are currently at record highs, finally higher than 2017 levels. Do you see this dynamic of like fees and blocks coming in slow? Is that something that actually motivates miners to come back online? And have you been observing that?
I don't think we're there yet. I mean, it's a question that I get a lot, which is, okay, Peter, so, after the next halving and the next halving after that and the next halving after that, Bitcoin mining is going to become, unless Bitcoin's at $1 million, Bitcoin's going to become, like, your revenue is going to, at least into convert into fiat, is going to be significantly lower. Are you hopeful that transaction fees are going to make up a big part of your future revenue, given that, mining rewards are going to go down? And I think the answer is it's too early to see. It's just all conjecture. Like, we just don't know how much of a role those transaction fees are going to have in the future. I think for sure they're going to go up as more people are using crypto, and as there's more people on the network and there's more congestion and all of that. But it's hard to say to what percentage. But we certainly see in times like this that there is a significant amount of revenue from them. Will it be, enough to incentivize miners to buy, the S28 or the S29 when that comes out in, 10 years from now? I think it's hard to say.
For sure. Okay, I think that makes a lot of sense. I guess this is my last question for you, and then we can kind of close it out. But really from like a jurisdictional perspective, there's been a lot of volatility in China, both infrastructure as well as from a regulatory perspective. And Argo is operating in North America exclusively, building up this huge home base in Texas, which is awesome. We're now seeing Kentucky even roll out, special treatment for cryptocurrency miners who set up shop in Kentucky. And we're starting to kind of see the jurisdictional arbitrage game start to come into play, as well as miners optimizing for different jurisdictions. Like moving forward, why mine in North America? Like, why is North America the place that Argo is kind of setting up shop? And are there other regions around the world that, look to be favorable for building a mining business?
Yeah, it's a good question. So we like mining in North America, and we started, going back to what I was saying when we first started the podcast about setting up in Quebec back in 2018 when we had access to cheap renewables. That was one of the big incentives to get, to be a miner based in Canada, based in Quebec. So those incentives are still around because the power in North America, in many cases, is, amongst the cheapest in the world. And if you look at, Quebec power, it's like, 3.8 cents. There's cheaper power than in many grids, parts of or in some parts of the United States. We're, building up this facility in Texas where, given that we can be what I've been using kind of the accordion metaphor, we can be an accordion. We can, at times of big demand, we can use load response and dial down our power, usage a little bit if need be, and for that we get real access to really cheap power. So I think it's advantageous to be in North America because the costs are still effective. It's obviously a stable political environment. And I think there's two big things moving forward, Christian, that we're going to see in this space. One is, as institutions want to hold more Bitcoin on their balance sheet, many of them are concerned that there isn't, that many of them are concerned about Bitcoin's energy footprint and are concerned about the emissions that are being caused by, we were just talking about coal miners in China. There's even miners in the United States that are burning coal to make Bitcoin. And so I think that ESG concerns by institutions who want to have Bitcoin is going to be a big driver for miners using renewable power in North America. And then I think the second is, having crypto that is understood by regulators, having Bitcoin that is, compliant to a certain degree. We don't know what that means yet, but I think that's why many miners are setting up in North America, is they're expecting that as more and more institutions buy Bitcoin and hold it on their balance sheet, that the regulatory, stability of North America is going to be a good place to mine. So what we've seen in the last, year is mining pools being set up in North America out of China. Traditionally, all the big mining pools, F2, Poolin, Slush Fund, Slush Pool, they're all in China. But we've seen in the last year, there's now mining pools being set up in North America, like DCG Foundry set up a pool, Titan set up a pool, and Argo has teamed up with DMG to set up a pool that is not. And so we think it's good that hash rate's coming to North America. We think it's great that it's, the whole point of crypto is to be decentralized and to be distributed. And as you've seen, like this past week, when it's too centralized in one place, it can be a threat to the network. Transactions slow down. So we want it to be distributed. That's great. But we also want it to be on clean energy. At least, from our company's perspective, we want Bitcoin to be synonymous with clean energy and clean energy, innovation. So we've launched a green energy mining pool where the first of its kind, where you will be able to miners will be able to join, and only if you have clean energy can you be part of the pool. And we think that's going to be really attractive to people in the future to be able to say, okay, this Bitcoin is green. We're working with various partners on how we can make sure that it's not just a greenwashing pool, but actually or greenwashing machine. That kind of has like a bit of a resonance to it, but it's actually a significant and kind of well thought out and well constructed mining pool that is actually creating, green Bitcoin. So we're working on that, and we're going to launch it this quarter. And I think it should have an impact on incentivizing other miners to use green energy moving forward.
That's very interesting. I mean, personally, I think that Bitcoin's incentives push people towards green energy in the long run as it is. I'd be curious to get your take on if you believe the same thing. But yeah, I mean, I'm not sure. I just don't know. Not sure how I feel about like saying, hey, these are green Bitcoins or these are not green Bitcoins. I kind of like the fungibility of Bitcoin, right? Like I kind of like saying this is Bitcoin is Bitcoin. Yeah.
No, Bitcoin is Bitcoin. I totally agree. And if there's going to be something called green Bitcoin, I think in the end, the way in which it'll be treated is it will come out of a pool and it'll go directly into a container that will then be traded, like the way in which Grayscale was kind of adding like a fund model is probably the right way to build it. I mean, potentially there's a token model as well, but look, we're working on it. We're trying to figure out the best way to do it. And fungibility is absolutely key. And we can't, we're not going to cause a fork. There isn't going to be something called green Bitcoin that trades, differently and separately, like Bitcoin is Bitcoin. But at the same time, there should be an incentive for miners to mine with renewable power. So we're working on figuring that out, and hopefully we'll have some announcements on it in the future.
Awesome. Well, again, Peter, thank you so much for coming on to the show. I learned a lot, and hoping to have you back on as things develop. Maybe in 6 months' time, I'm sure a lot more hash rate is going to come online and a lot more drama. But until then, where can people learn more about Argo, learn more about yourself, and yeah.
Awesome. Thanks, Christian. Thanks for having me. People can learn more about Argo at arboblockchain.com. And we're on Twitter at Argo Blockchain. And my Twitter handle is at Peter G. Wall. And we're very active on the socials. We just actually made a big announcement today. Can I tell you a quick story before we go?
Yeah, absolutely.
It's not a big announcement. I'm kind of being a bit facetious, but it's a cool announcement. We sponsored. So as you know, in the UK, there's, like lots of soccer, lots of football teams, and they wear, jerseys with advertising.
Which team did you sponsor?
Right. So, we've been getting pitches through email and through recently, like people have been reaching out, and even like agents, hey, do you want to sponsor this team or that team? And so I got an email in February from a local 6-a-side recreational team in a suburb of Manchester. And he's like, hey, we've got a rec team. It was not very much money. Would you sponsor our shirts and buy us our kit? And we'll put Argo on the front. We're all Argo shareholders. Our team's all Argo shareholders. So we emailed back and said, yeah, let's do it. So we are the sponsor of ARB, which is our stock handle, our stock ticker in the US, in the UK, sorry. ARBFC, which is Argo's first football sponsorship of a team composed of Argo shareholders.
I love that. We don't need Manchester United. We have our team, right?
We've got ARBFC, and the whole point is like crypto is all about like grassroots and empowering everyday people to be, financially independent and to be, connected with each other. And we're all about the little guy. So we sponsored this team, and it's we're excited about it.
All right. Awesome. Well, I love that story. Peter, if people want to learn more about the team, learn more about yourself, is there a place I can find you on Twitter or elsewhere on the internet?
Yeah, so at Argo Blockchain is our Twitter handle, and at Peter G. Wall is that's our main social media spot for sure.
All right, cool. Well, again, Peter, thanks so much for coming on to the show. I learned a lot. To all the Bitcoiners out there, make sure to give Peter a follow. Make sure to follow Bitcoin Magazine while we cover Argo. They're putting a lot of hash rate onto the network, and we love keeping track of their big buys and their big moves. So Bitcoin Magazine is going to continue to be watching and covering Argo. And you can find me at CK_snarks. Make sure to give us those 5-star reviews. Peace.